Today's topic has two presentation. I will switch in between. I'll show you some charts at the end, and I will tell you what I do. So there are many things I do during the trading hours. So it depends what the stock is doing and what I'm looking for and what I recognize based on the previous experience. So recognizing that this is a good setup, so it makes sense because I compare the previous experience with the new one, and then I get some good feeling. So you need to get some feeling, good feeling. So you have to be aware of that. Are you getting the good feeling with this, whatever you're doing in life? If you're putting on any deal, any real estate deal, any stock trading, any chart, anything in life, if you get a good feeling, you need to be aware of. So I'll try to explain. I'll talk some money making trading strategies I employ. So there are many kinds of trading, as we all know. Scalp trading, which goes from the scalp traders, they just go for 5 cents, 10 cents, 1 penny, 2 penny. I'm not a scalp trader. It's very hard to do. Um, Needs completely focus, no distraction, and I cannot do scalp trading. And I have two children at home, so they go to school and other stuff. I cannot do scalp trading. And I also provide trade alerts to my members and education. So I just don't do scalp trading. But there are traders who do scalp trading. So the shorter the duration of trading, the more risky it is. And more, you need to be more agile. So you're taking a lot of risk. But so I don't do that. Day trading, people do day trade. I don't do. It so happened that I put on the trade and it becomes a day trade if I close the trade the same day. So day traders, they go home with cash. So you can be a day trader in one account and you can be a swing trader in another account. So you can put different hats if you want, and traders do that. They pull out different hats. So day trading in one account, swing trading in another account. So this is what I will talk to you about. Swing trader. I am mostly swing trading or position trading. In my retirement account, I have long-term position, which I don't change. I add dollars in my long-term account, but I don't, unless there's something wrong with that stock. Otherwise, I'm holding it. So I'm a long-term trader, position trader, and a swing trader. So I'm these three. Swing trading, I'll explain a little bit about the swing trading. Swing trading, what it is. Position trading. Swing trading is anywhere where you hold a position from 1 to 7 days. Position trading is when you hold for 14 days, 3 weeks. So you hold, and mostly the position trading is done, in my opinion, in a stock, not in options. Unless you know that it's worth holding that option for more gains. So you have to read the chart correctly. But even then, the stock just, if it goes next day 5 points for any negative news, and even if it goes back next day 5 points, the net result is zero in terms of net change, and there's a time decay in the option, so you didn't gain much. Maybe you lost a little bit. And the long-term trading is the long-term trading, 6 months, 1 year, or forever. So scalp trading, day trading, swing trading, position trading, long-term trading. What the traders make mistake, they wear different hats, but in the same account. So that's where they get messed up. They wear different hats and they are doing in the same account. So for each kind of trading, you have to isolate the account for each kind of trading. Even stock and option trading, you need to do in a different account. They mess up, they do the option trading in the same account, they're doing the stock trading in that account, unless you doing the covered calls or naked put. But pure speculative trading, don't do in the same account. Need to have a different account for each kinds of trading. But traders don't do that and they mess up. They open an account, let's say for $100,000, and they say, okay, I will only trade 70. I will trade 70,000 in the stock, and 30,000 is for my speculative purposes for option. But then they get carried away, and gradually they go towards more option, more option, more option, and by the time they realize they are 100% invested in option trading, which is a speculative. So now they instead of 30,000 towards option and 70 towards the stock, they're completely into option. So they increase their risk. So they slowly they go towards the water, and then the wave comes. Just this we're talking about the flood. The wave come, and then there's no point of return. So that's happened. So you, it's like uh, you, if I don't want to, let's say I want to avoid drinking problem. So I cannot say, okay, I will go to the bar, but I will not drink, or I will go to Vegas, but I will not gamble. I have to be really strong. I go to Vegas and I don't gamble, or I go to the bar and I don't drink. So why do that? Why open? Why have an account with the fund freely available to you and trade? So be careful what you're trying to achieve. Also, be careful of knowing who you are. So, a 60-year-old person is different than a 25-year-old person, or an 80-year-old person have a different objective than. So people don't understand this, and they just mess up their trading. Now, another thing traders don't understand is about the market. So, market goes into different phases, and based on the market condition, then they need to understand their exposure and what kind of a strategy they need to adopt. So traders make big mistake. Traders, the biggest mistake traders make, or the investors, they don't know who they are. That's the first thing. They really need to know who they are. So they have to sit down and understand. So there's a lot of, thing goes on into knowing who you are. So even your wife doesn't know who you are. So think about it. So first understand who you are. After you understand who you are and what you're trying to achieve, there's a big thing. Then you need to know what the market is doing, not what we think the market will do, or we pray what the market is expected to do, what the market is doing now. So you can have some idea that based on this, what's happening right now, I expect the market to do this, and then you go about doing your thing, trading. So if you're always worried about the market, then maybe don't trade. Don't just don't even invest in a stock market if you're always worried about the market. So knowing about the market is the second step. So knowing who you are is the first step. Knowing about the market is the second step. So some source available to you, whether it's your own or whether external. So always get caught in the market. If you know the market condition, 80% of your problem is solved in trading. Then you come and based on the market, then you say, okay, there's one thing which is missing here is the trading system. So based on the market conditions, which can be uptrend, downtrend, and a sideway. And above the uptrend, side trend, and a sideway, there is something they call it bull market and a bear market. So people get hung up on a bull market and a bear market. So the market could be a bull market and the market could be trending down. Market can be a bear market and it could be trending up. So it depends on your horizon, trading horizon. What is your trading horizon? So I am aware of bull market and bear market, but being a trader, that's a secondary. So I just know, okay, it's a bear market. Okay, I know it's bear market, but what the market is doing, whether it's trending up, downward, or sideways. So some kind of you need to know what is based on the criteria, whatever it is, your source, external, etc. Second thing, then you have to understand the based on downtrend, uptrend, or sideway, whether the market is quiet or volatile or very volatile. So what kind of market it is? Because when the market is quiet and bull market or uptrending market, you can make a lot of money very fast. The increase in the return is if you're trading properly, the return could be 20%, 30% per month on simply on stock market, on trading stocks. So it could be that much. So quiet market. The volatile market, where that's where the traders lose shirt. because they don't understand the exit. They get in, and the next day, the market goes the other way. If they buy puts, it goes down next day, but they don't take profit, and then the second day it goes up. So they just get whipsaw. So downtrending market is always a volatile market. Most of the time, the downtrending is the volatile market. The uptrending market, most of the time, is a quiet market. So if you look back, um, 6 years. So when Donald Trump was there, the market was a bull market and it was a quiet market. During pandemic, the market was downtrending and a very volatile market. And then it bottomed out and it went up. So downtrending market, volatile market, uptrending market mostly is a quiet market. So understand the market, then we need to have a trading system, at least two of them. One trading system give us for the some kind of trade. And the trading system could be as throwing a dart on the wall. That could be your trading system, or flipping a coin. Head, okay, there's a head here, I'm gonna go long, or there's a tail, I'm going short. So that could be your trading system. It's perfectly fine if you think it works, or throw the dart on the wall. If it works for you, that's your trading system. So knowing what is telling you, what is the trading system is a black box, or it could be a visual, or you are a technical person, or you are a fundamental person. So whatever it is, and then so based on the market, you pull out that trading system. It gives you a candidate, whether it could be just as simple as scrolling down your um, basket of a stock and looking at the chart one by one. It could be as simple as based on net change, dollar wise, net change, percentage wise, any stock which is moving above its more than its average true range, any stock which is moving above its normal volume at that time called relative volume, any stock moving breakout or MACD crossing or RSI tilting this way, moving average crossover or a 21-day channel breakout, whatever it is, your trading system. And then so you get the candidate, then you go and say, okay, now what is my strategy? So the same stock going up, then one trader will buy the shares, simple, buy the shares. One trader will go and buy the calls, in the money, out of the money. One trader will create maybe a put spread, bullish put spread. One trader may just buy the shares and sell the covered calls, whatever. So different strategy. So it starts from the top, who you are, then drill down, knowing 100% who you are, then understand what the market is. Then you open the trading account, then you run your trading system, you get the candidate, whatever it is. Then there is a process for um, selecting that symbol, whatever it is. Once you identify the trading symbol, then you say, okay, this is the strategy I will adopt. So if if the if the market is somewhere here and you are doing the strategy which belongs on the right side is not matching. So this is the Venn diagram. It's called Venn diagram. So overlapping. So you can put another symbol, another circle called U, a big circle. Maybe I'll put next time. I'll create another circle, and I will say U, a big circle, me. So wherever it's overlapping, that's the area I need to focus. So me, who I am, then the market, and then my trading system is telling me to trade this candidate, and then I adopt that strategy. And not only that strategy, um, um, so who I am will also tell me how much risk I'm willing to take. So if I am a 25-year-old person, I may be going all in and I'm trading doing speculative. But if I'm 80-year-old person, I'm doing something. Return is secondary. Preservation of capital is my primary purpose. So I'll be adopting a different strategy. reducing my risk exposure. So you see the common where it's overlapping, that's what you need to do. So the traders, they are not aware of all this. They don't know who they are. They don't know what the kind of market it is at this given any given time, or how the market is building, what you are seeing in the market, what you are anticipating, what do you expect next, that the market will give you some kind of signal that is confirmed up or unconfirmed up, confirm up, and then what is the strength of the market, whether the market is neutral, market is solid, long. So I do that study. I used to do it on my Excel worksheet for a long time. Now I feed the data. At the end of the day, I feed the data, and then I get the result of my market analysis. So it's on my website. You can sign up. Knowing, so whatever it is, whether you sign up for my market analysis, I do the analysis for the four markets: Dow Jones, Nasdaq, S&P, and Russell. So I combine all four. People, another mistake they make in understanding the market, they just, uh, in my opinion, so again, I'm telling you my belief. So right now I'm talking since 4 o'clock, I'm telling you about my belief. So my belief doesn't have to match your belief. We all have different beliefs. So what the traders, so what I'm telling you about the people just analyze one market. They say, it's S&P 500, it's a main market. So S&P 500 may be the main market, but maybe the Nasdaq stock is doing something else, or small cap stock is doing something else, or the Dow Jones, the 30 top stocks, they are maybe giving you the leading indication, or maybe they are lagging. So I analyze all four. I'm aware of which one is moving a little faster and which one is behind. So if one market is moving and you know that this, okay, this market is moving, now I need to know about the candidates in the other market. So if they are behind and they have not started its journey, I get a very good feeling that, okay, so I see Dow Jones is moving up and there are only 30 stocks, and Boeing is flying and Caterpillar is going up, and I missed the move, or I'm already in it and it's overbought. So now which market is next? So I say, okay, maybe some candidate from S&P 500, maybe some tech stocks, maybe the small cap start moving, and then I have a list of all the small cap stocks which are have started to move, or I missed it, but I'm looking for the pullback. So analyze all the market and be ready to trade from all these four markets. Also, you can have a basket of stocks from, you cannot watch. Another, the traders make mistake is they watch 8,000 stocks. Like they have a scanner running and they have 8,000. They just looking for something. I don't do that. I have a chart. I'll show you what I do next time. So I learned in the early age. I met somebody named Chief who was right here in Anaheim, and he told me about something. I'll show you the next slide. Maybe I have it here. Yeah, this one, the Bruce Lee advice. So at that time, 15 years ago, when I asked Chief, I said, Chief, people are trading futures, commodities, and forex, and stocks and options and all that, and this company is selling all the softwares. So what do I do? So he told me, no, you just practice one kick 10,000 times. Don't practice 10,000 kick one time because you will fail. So traders, they make so what it means is you just need to have 150 stocks in your basket. I do have 500 stocks, but mostly have a basket of stocks for 150 symbols. So 150 symbols nicely selected from each sectors, from each industry group, some from tech, some from you know oil, some retail, some financials. So something is moving every day. If you look at the overall market is down, you say, oh, the overall market is down, red. Oh my goodness. But if you look, then you say, okay, overall market is down. Let me see the gold stock. Gold stock is moving, silver is moving, so something is going on. Let me see the oil stock. I have 10 stock, not 100. Same stocks: EOG, SLB, CVX, XOM, HES, PDD, so not PDD, it's a PXD. So all this, one of them is OXY, HAL. All I need is 10 APA. One of them is moving, or two of them are proper there for me to select and trade. So create a basket of stocks and then apply that this over here. So if you put another circle, let's say it's U, so it's U, another circle which is missing here, and then the market, what kind of market it is. So I'll go over the market some other time. I have explained the different kinds of market in detail. Then you are adopting the strategy, and you can, if you put another circle here where you say, okay, these are the symbols, these are the instruments I will trade. So now you are really focusing. So this what is it called, intersection, this intersection is big right now, but if you put U and you put symbols, basket of symbols 150, then this will become more the intersection will become really narrow. So that is the laser focus area for you to nail down. And out of all that 150 or 200 symbols, then 10 or 15 maybe in the day which meet some kind of your criteria for trading. And out of that, then you can have a system of ranking. So I do all that. So what I'm telling you, I do, and every day I improve upon. So it's like constant R&D going on. I have, I have resources which I can, based on the experience, and now I can devote some resources. So I'm telling you, based on my experience and resources, so you just rank it. So maybe you have some criteria of ranking your trade from 1 to 10. So you say, okay, I will only take the trade which gets the score of 9 and 10, not 8, not 7. So rank it and then trade those which qualify 9 and 10. So once you get that symbol which qualify 9 and 10, you're not immediately going to take the trade unless it's something like a Momo and you really want it. When you may want to put some dollar into it, you will put that symbol which you got 9 and 10 ranking into your stocking process. So there must be some stocking process where you say, okay, this is 9 and 10, so I must not let it go, and I'm gonna put it onto my stocking system. So it gets transferred into the stocking uh, process. So what is your stocking process? How do you stock that symbol for your entry? Because once you identify that, you just don't jump on it. You need to put it on, remind yourself, hey, Noshi, you need to be patient, patient. This will come to you. So you remind yourself. So you do the process of stalking and then you enter, because the stalking is another form of risk control. So if you adopt the process, the stalking, you are actually adopting a risk process, risk control process. And by reducing your risk, you're increasing your profit. So that's another story, how you can stock to reduce your risk and increase your profit. So in other words, just identify few symbols from each category and do your thing. Focus on it and then execute the techniques um, again and again. It's like every day it's the same process for me. I wake up at 5. First thing I do is turn on the coffee, turn on some heat. At nighttime, I don't like heat. I don't know. I turn on the heat in the morning, turn on the coffee maker, go shower, pray, then make the coffee, come to office, read the news, read some emails, important emails, go through the positions, and then start at 6:30. The market opens, and then look at the open positions, get some alerts. If I have set the alert will come, take the profit or whatever it is I have set. There are many kinds of alerts. So uh, uh, maybe 20, 25 kinds of alerts. So I focus on those and take action. And then also looking at the new candidates. So on one side, I'm monitoring those symbols which needs my attention, and on the other side, I'm getting ready to find a new candidate. So there's a simultaneous process going on. So execute the techniques, produce faster returns. So I'll explain some of them in brief, not in detail, because each one of them requires a lot of talk. So some of the techniques, breakout strategy. So stocks may be breaking out. Um, I don't trade the 52-week making a new high. I hardly trade such stock which are making a new high unless I can read the chart, because if the stock is making a new high, then it becomes hard to measure where's the target, because it's trading in uncharted territory. So traders, they get stuck in this. They don't understand how to calculate the new target if they are trading in uncharted territory, because if the stock is trading in the same territory, then it's easy to understand, read the landscape. You can identify the resistance, and you can identify the support, and where the battles were fought, and what you expect where it can do its thing. But if it's the stock is in a new territory, then it's just there, and any slight negative news, the profit taking will take place, and then you will get caught. The breakout reversal strategy I do when the stock just sometimes the stock falls sharply. I give you two examples. The on Friday, Delta Airline and JP Morgan. So both of them did that. Some news came, they gapped. So when the stock gaps down and then they reverse sharply, they're breaking out to a new level. So I expect JPM to go above the recent high, and then maybe I think it did, and then the Delta. So Delta, I expect it will go above its recent high, like made on Thursday. So so when this happens, sharp move, it's a breakout. It's breaking out to a new level. The gap strategy, I do. So these are every day I look at something going on, and I take um, I adopt. So gap up strategy. So gap up, it depends where the stock is gapping up from. Is it gapping up after a downtrend? So if the stock is has been going down for a long time now, and it's not doing anything, and it suddenly gaps up after the consolidation, and there is a sharp volume rise early morning. So that is one indication that the stock will continue its upward move. The gap up could occur above some resistance level. So if you can identify a resistance level properly, and the stock gaps above the resistance, so it's like going other side of the river. So as long as it stays above the resistance, it will it is expected. So it's all about your expectations. So if the stock gaps above the resistance and you clearly identify that resistance level, so your um, so it depends what it's doing early morning. It can be it may have just gapped up and just sitting above the resistance level and just not doing anything. It's like if you look at the bar, it's like a twinkle twinkle little star, and suddenly and then you are watching on your lower level time frame, and suddenly it starts to accelerate. That's where you know that okay, the uh, it has started its move. It may moved up already by the time you see it, if you have not watched it in a pre-market and it gapped up and you're too late. It has gone up a lot, maybe 75% of its ATR or whatever. So now you need to wait for it's to some kind of a pullback. So while the stock is doing its thing, you are identifying the level where it pulls back, and then you will get in. So what is your process uh, of the gap up stock? So not all the gap up stock continue to go. So it also depends if you have a position in it. If you have a position in that stock and it gaps up. So you're already in it, and now you see a big profit. So at that time, you need to ask a question. The question should be that um, if I did not have a position in it and I see this gap up, would I initiate a new position? If the answer come yes, then why you are selling your existing position? You shouldn't. If the answer is yes, I would have gone in, initiated a new position. So maybe at that time, instead of selling, you may add more to the position. If the answer come yes, if the answer come no, then and if you have a position, then you ask, okay, the answer is coming no, then why am I holding this position? If I don't want it, I should be selling it. If I don't want it, I wouldn't initiate a new position. Maybe you're selling, you want to sell, but when you want to sell, then you have to remind yourself again, saying, okay, I know I need to sell, but this is an exit protocol triggered. Now I need to calm down. I know I need to sell, but proper, not just willy-nilly push the button and out. No, not like that. Exit protocol triggered, and I need to remind myself the exit protocol is triggered. Now is that we already know we need to exit. It's where we need to exit. So what's the level where I can maximize? Is it more going up? If it's running up to some resistance level, let's say you identify another resistance level to the upside and the stock is running up. So when you identify the resistance, now your job becomes what kind of resistance it is. Is it very strong resistance, or is it um, average, and you expect it to break, and what kind of momentum it has? So maybe the resistance, if it's a weak resistance, it will break, and you expect the market to continue up. So at that time, you have to identify the resistance. You have to identify the support level quickly. You have to know if you have an open position. Sometimes the market gaps up, and you don't see any gain in your option. That's the way the game is. The option doesn't move. Something happened. Sometimes the market gapped up um, early morning, and then the option market is not open. So now you are at the mercy of the market maker. So all that is going on when the stock gaps up. But usually, if you are in a long position and the stock gaps up, that's a good news. Similarly, the gap down strategy. So the gap down, when the market gaps down, so so where it's gapping down, is it gapping down to some support? So quickly identify if you have a position and that stock gaps down, you need to clearly quickly know that this gap down is not good for me. So where is the gap? So usually the gap down, most of the time the gap down occurs at some kind of support. Something happens that it just miraculously fall into some support. If it's doing that, then you be aware of and flip your chart intraday, 5 minute, 15 minute, and see where the stock is headed, gap down. And if you have a position, then identify the support level. If it's far, then maybe you need to sell. You need to just get out. It's your bad luck. Whatever happened, happened. But if you don't have a position and you're looking, if it gap down, then you have to know how big is the gap and where is the support. Is it most of the time? So for the gap down, you need to really identify what else is the potential. If you are buying, if you're going short or you're buying puts, so look for some retracement level to some upward resistance, and maybe you don't want to buy the puts. You put that symbol into your watch list for some kind of retracement, and then next day or 2 days or 3 days later, you go short. Maybe you put down the on your watch list and watch that symbol patiently every day till you get so whatever is your criteria of reading the chart. If you keep watching, maybe you see a clear cut reversal to the upside, and that could make you a lot of money if you watching the gap down strategy, the stocks, and every day you take a look one time that what is doing now, what is it doing now. So maybe it's going to start to go in a consolidation mode, like it's just moving up, up, down, clearly, and then the breakout occurs, moves, it starts to do its thing. The gap up reversal strategy is when the stock gaps up and hits some resistance. So I don't do this. Uh, uh, I'm mostly, I just don't, most of the time I'm not trading um, for the gap up reversal. I don't, when the stock gaps up, it gaps up. I don't go and buy puts. Have to be very accurate in reading the chart. So if it gaps up, I'm looking for some reversal and then go towards the direction of the gap, not against the gap, especially gap up. Gap down, I like gap down reversal because, and there is a reason. The stock can gap down for, let's say, a negative news came and it gap down, market open, and then it's suddenly it finds buyers. So someone think that this gap down is an opportunity to buy, and they start buying it. So if I'm pretty sure about the gap down reversal, then I initiate a position. Otherwise, I just let it wait and do its thing for a few days, and then find my entry and go towards the long. The next one is called opening range breakout. This is what I learned long time. So opening range breakout is when the stock opens up during the day and is doing its thing during the 15 or 30 minutes. I note the high and the low made in that trade. I'm watching the, let's say, 30-minute opening breakout. So on a 30-minute chart, I'll draw down my levels, the highs and the lows. So it needs to do its thing in that 30-minute range and decide. So once the if I'm watching towards the long, once I clearly identify that this is the one which is doing its thing. So for instance, the stock, let's say the stock just gaps up a little bit. So there are 15 stocks in the symbol. So I make a list of I identify the highs and the lows, I set it up. And then if the stock is moving in the first 15-minute window with a certain volume, then in a 30-minute window, if I have set up another window, then they should make a new high in that 30-minute window. So only out of 15, maybe there are 5 or 6 of them which are making a new higher on a 30-minute. So those are the candidates which I look for, because most of the stock which gaps up, they just die and they don't move. So I'm looking for some kind of a time base, time based and the volume base. So time based and a volume base, when you apply that on a stock which has already gapped up a little bit, not much, then the breakout should occur initial from the initial early morning. So 30-minute, maybe 35-minute window. So I've set up that window, and when I see symbols transferring from 15-minute to that 30-minute window, then I take a look and I get the alert, and then I take a further look. And by that time, I have analyzed the support, I have analyzed all the resistance level, I have read some news, I have evaluated the uh, option chain. I know where the stock is. I know where the target will be. So based on I know where the support is. So based on all the support, all the resistance, where the target will be, what the stock is doing, what the momentum is, where the volume is, and where the activity is in the option, where the spread is narrow, where's the open interest, all that combined. Uh, so I'm doing that work and deciding that this when this trade like uh, the time comes to push the button. So there is a moment at that time where you are taking a bold and courageous action. So when you push the button, so whenever, when you sign a dotted line, you're buying something and you sign, so that's the time you can make a mistake or anything. So analyzing all and doing your best, accepting the consequences of the commitment, and then go for it. So that time the action should be bold and courageous, because you have done all the homework based on the available information you have to you, based on all the available information, based on all the skills and judgment and your experience, based on what the symbol is doing at that moment. You have done all the homework, and it's time to push that button. So then push the button. So swing trading is a speculative trading. So swing trading is 1 to 7 days. Hardly, if the stock just keep going and hit some target and big profit, um, you close the trade on the same day. Otherwise, you're holding it for 7 days, 10 days. So speculative, it's a speculative trading. It's dealing in active market. So you cannot do the swing trading in that market which is not active, which is not, doesn't move. It needs to be some high kind of beta stocks, some the stocks which move quite actively, and it's kind of liquid market. It's not only the average volume is 300,000 shares. That's it. So some kind of market. So I have a filter. So you can prepare for swing trading. You can prepare the list so you can do your homework of identifying all the symbols, and based on the criteria such as volume, such as beta, such as ATR, such as always in the news is moving, there's something going on, like, if you look at it, there's something going on with Apple, Baba, Baidu, Home Depot, Caterpillar, oil stocks, and Meta. So these kind, Home Depot, Lowe's, CRM, so these kind of stocks. And then there are other stocks which are just down, beaten, and then they start to move, like a Momo or Riot or Mara or AI, and then Tesla. So these kind of stocks. So you prepare the list and trade those. So the beauty of swing trading is the combination of two concepts. So you so it's kind of investing also, and everything is investing. You are investing. Even if you're trading, you're investing your dollars. So you're not doing a long term investing, and you're not doing day trading. So it's kind of in between. So it's kind of faster than the long term trading, but slower than the day trading. So slower than the day trading, faster than the long term trading, or faster than the position trading. So it's in between. So how you do the swing trading, you anticipate its next move the stock is doing. You need to have some kind of a system, some kind of a skill, where you do the head start. You're not in like traders, they don't understand uh, where the trend has started. Though they go in the middle of the trend, or they enter in a trade which is overbought. It has been going on for 5, 6, 7 days. So they fail to understand that the move is already going on for 6, 7, 8 days. There must be some reason for me to get in, because those guys who bought it way before 7 days ago, I'm entering on the 8th day. They all can exit and be profitable, but I will be stuck. So understand where you are starting. It's better to have some kind of a system to detect the change in the trend. So this is very important. uh, Understanding the change in the trend, or understanding the change in the sentiment. So a new sentiment, a new change, something, a new catalyst has occurred or about to occur. You can read it and understand the reactions. So based on you're detecting the change, and then you're understanding the reaction. So you can detect the change, but um, you don't have to enter in the trade right there. So you know it already that this is the one, but you don't who says you go immediately all in. So you prepare yourself for attack. It's like where you will be attacking, which side. It's like battlefield. Maybe you watch some YouTube videos of the generals and kings, and see how they fight. Maybe you go and see how Genghis Khan fought the battles. So understand the reactions, and then take. You already and you know your bias. So you already know your bias, and then watch it, stop it, and you will know the reaction. So some kind of understanding the reaction. Um, so understanding buying and selling, whether um, this buy is a temporary, or this is a new catalyst that the sellers are done and the buyers are in. So understanding that correctly plays a big role in swing trading. understanding the support levels and understanding the resistance. So if you ask me what is the key to trading, is understanding the detecting the change in the trend, and understanding where the support and resistance is, because support and resistance will tell you how far damage will be done to you when the trade goes other way. So as long as, if you're going long, as long as it's trading in the support level and it's not violated, you hold that trade. As long as the trade is, I'll show you one chart, one or two charts, but as long as the trade has not crossed the resistance, you hold that short position. So I'll show you, I think Eli Lilly or LMT. So understanding support, understanding resistance, this is very hard. So I have worked on it over the years to identify support and resistance. I have worked myself on understanding the change in the trend, detecting the trend. I have mentally reminded myself and all the time that I should not be chasing the trade, the one which is going up. So if I like the trend, because if the chasing the trend is like music game. As long as the music is there, you're making money. When the music stops, okay, you lose. You're the last one. There's no chair left for you to sit. So I don't want to be that kind of guy where there's no chair left for me. I want to be where, the game has just started. So when the game started, so and if I have done the homework, so if the kids, they get rewarded by the teacher, the kids who do their homework. So if you have done the homework previous night, then all this become easy. Otherwise you come unprepared and rubbing your eyes and things like that, not easy to make money. So objective of swing trading is to maximize profits in short period of time and minimize the downside risk. So understanding support and resistance and maximize profit. So when you combine swing trading with option trading, then option trading gives you more return. So if the stock move 3 to 7%, and your timing is right, then the option, if you trade stocks and you will get easy 3% is easy. The stock do move 3%. The small cap stock, they move 25, 30, 40% in a matter of a few days. Small caps, $5 stock, if it goes to six, it's 20% gain. And when you combine that with option trading, it's 40 to 100% gains. So somewhere in between. So swing trading has this advantage, and when you combine it with option, 40 to 100% gain. So what are the tools in swing trading? You don't need an indicator. I don't have indicator. So I don't, if you say, like when I started my trading, I started with the green line and red line, then I switch it to MACD and RSI and a stochastic. The MACD is, peeping above the zero line. RSI is like a 10-degree, you see that. And then you see stochastic is oversold. And this is moving 50-day, just cross 50-day moving average. And this thing is happening. And then this thing is happening. And. So many and then nothing is happening. So you get paralyzed. So I don't do all that. So I don't have any perfect indicator. I just learn the chart better. I see, like you see it, you identify it, you see the signal. So there is a discovery process. So there is a big flow chart I'm preparing. I'll show you one day from beginning to end by a flow chart. I'm a flow chart kind of guy. I'm a process person. So flow chart, if this happened, then this is happening, then this is happening, it's going this way, this is what it is. And then I make the final decision. So if you start, it's a discovery process. So something happened, a big bang, you get the symbol right in front of your screen, something shows up, and then you see that and you feel good. You say, this is it. Yeah, this is, it's like, oh yeah, this is the girl. This is the one I want to marry. So that kind of situation. So that kind of feeling you need to get. Oh, this is the one. I do something about her. So that this is the signal I recognize. It sounds familiar. I have seen that kind of girl before, and I miss, marrying. So this is the one. This time is I make sure I marry. So this is the time I need to really watch this stock. I see the signal and I recognize it's familiar. I've seen that kind. So once you get that, then you say to yourself, okay, so I just don't want to marry her right away. I need to stalk. It's like one day I was telling my daughter, okay, I was reading something, stalking. So, or I told my daughter, hey, my daughter is 8. I'm going to teach my student about the stalking process. So she said, oh, Daddy, do you teach stalking? So I immediately knew what she meant. So I tried to explain. So once you see the signal, you recognize it's good, then you know you're going to uh, trade it, but not yet. So you put it on your stalking process. So you open another process and implement that stalking process. So you start stalking, and then you take action when the time comes. So you're executing the same techniques daily, again and again and again, based on your judgment, based on your skills, based on the expertise you have, and you are very flexible. So you're very flexible your strategy. Sometimes you are buying out of the money calls, sometimes you're buying in the money calls, sometimes at the money also. Sometimes you're buying 2 months, sometimes you're buying only three weeks. So you're doing so many things. So what is good based on the market? Maybe there's not maybe the holidays are coming, maybe there's a long weekend coming and I have open positions. I need to close these positions because the long weekend is coming. I know 3 day time decay, and then who knows what happened on Tuesday, and I have these many positions. So exercise flexibility and close the position. Maybe you don't want to open, so anticipate. Do you know, when you are opening the trade, do you know the difference between the calendar days and the trading days? So the calendar days may look like 60, but when you cut it down, chop, 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 all the weekends, all the holidays, and something, it comes to 40 days. So you actually have 40 trading days, not 60 days. It may look like you are buying 60 days of time, but you're not. You're just buying 40 days. And by the time you realize the trade goes, and you look at your like your data on your trade, and it says 28 days left to expiry, and before it expires, the earning is 6 days later. So now you have a problem. 6 days later, the earning is coming, only 28 trading days left. There's maybe something else happened. So you are very flexible in closing your position. So have all this data available. So do you have a system in analyzing all these things at the same time? So think about that. Do you have a system to analyze the broader markets and all the indices? So all the cash market, all the futures market, all the ETFs, so like ETF like DIA, IWM, SPY, QQQ. Do you see the gold market? Do you see what the oil is doing? Um, do you understand where the support and resistance? Do you understand the change in the trend? Do you understand the volatility in the market? Do you understand the strength in the market? Do you know which one is a leading indicator and which one is a lagging, which one is moving and which one is behind? So all that. So these are the tools in the swing traders box. And once you stack all this, all you're doing is you're stacking the probability in your favor. You're doing the thing, you're putting all the ducks in a row and then assigning the risk, that this is the trade I'm taking, this will be the risk. And then after you select that, then remember I talked to you about you. So it's you on the top, then you're trying to do, and then you're understanding the market. Another thing you are understanding, based on the you also understand your risk. So based on the based on your portfolio size, based on who you are, then you assign the risk, like how much risk you're taking based on what else is going on in your portfolio. So all that goes on. So maybe you have a tool, you developed a tool in Excel worksheet. Is as simple as Excel worksheet where you plug in the numbers of your portfolio, the risk, worst come worst. So always assume that this position can go zero, especially in option trading. And in small caps. So in a small caps, they talk that this is a growth stock and the fundamentals are so good, the sales is this, earning is this. They all just assume that they are cooking the books. They're saying 20% growth, this much sales, or this is the market we identify. We reduce the cost. We are going in in this market, and we hired a new CEO, and all that. You just say, okay, baloney. But because it's a small cap and it's looking good, so you're buying a $5 stock, it can go to zero. It can go bankrupt. Maybe the CEO was just, my friend says, maybe the CEO pinched somebody's buttocks or whatever, and then he goes to jail and the stock goes to zero. So small caps and the option, they are highly dangerous. So you understand the risk in option trading and in a small cap trading. So they are very volatile. Your investment in that position can go to zero. So as long as you understand that if position goes to zero, I'll be fine. So you just then you take the trade. So stack probability in your favor and then push the button. So uniqueness of swing trading is easiest trade comes before crowd notices. So this is what you have to identify, learn, detecting the change in the trend, the beginning of a trend. Fortune is made by a singles, not home runs. So 40%, 40%, 50% here, 35% here, 60% adds up. And home run, once in a while you get home run. So if you get a home run, suddenly gaps up 200% gain, and you just bought it yesterday. So you got lucky. So there's no skill involved. In home run, there is no skill involved. It's just that you got lucky. Just to be honest, it gapped up, some news came, and then you think you are a genius. So it's not. It's you applied the skill, and it so happened luck also showed up. So this home run will take care of losses. A smooth and rising equity curves needs to be, if your equity curve is rising fast, there is a problem. So if your equity curve is rising fast, more than like 45 degree or 60 degree, like in a parabolic, then you are doing something wrong. Your equity curve should not rise sharp because you're taking risks. So your equity curve should rise uh, some kind of like 20-degree angle, not flat. If it's flat, is okay. It's not tilting going down. Even if it's flat, is okay, but rising in a nice way, not parabolic. Parabolic equity curve rise brings it's nothing to do with you. It has to do with the market. So if your equity curve is rising fast, it's nothing to do with how genius you are or someone else. It has to do with the risk you're taking. You have just increased your risk, and the risk is giving you the return. As long as the music is playing, that risk is helping you. And when the music is stopped, that risk will turn against you. So I recognize that. You need to have a smooth and equity curve. So in our swing option trading on our website, through our trade alerts, we provide real-time trade alert. We don't I don't say overnight, okay, this I give you 50 symbols with the buy price and sell price, and we say, okay, this is the buy price and this is the sell price, and after out of 50, one goes and become a winner, and then I come and say, okay, see that I gave you overnight that one, so what about the other 49? So we don't do that. It's a real time. So during the market, I don't give any trade overnight, nothing like that. I cannot trade overnight before. I don't know what will happen. It's just the watch list. I don't know what shoe will drop tomorrow and what will happen. Nobody knows. So when we sending out alert, we specify the buy price, exactly what is trading at that time. We provide via email and SMS. So if you have a cell phone, you provide us. We provide three targets called green, yellow, and red, and the stop. So the stop, this is another thing which traders don't understand. In option trading, the stop is different than the stock trading. So the stock doesn't understand you're trading option. So think about it. You're trading option. You're trading a stock. You're not trading, reading the charts of option. So when you the stock can do its thing and then eventually hit the target, but by then the value of the option has gone down. So in option trading, unless you're buying deep in the money and it's a lot of money you're paying, ideally there shouldn't be any stop. Only the worst case is stop in option trading. Only the worst case, when you really think that this position is not good and we need to get out and the trend has changed. So as long as the trend is there, so this is what happened when the time decay kicks in. So but I provide you the worst case stop. I post the charts, I send you the charts. So during the market hour I post, I send you email. So I prepare the charts and send you, and I will show you some charts there. I hold the webinars, and I intend to hold webinar twice a week. So in emails, there is a public Facebook group you can join. You send us email, and we will send you invitation, or you can find us. There is a 71-page trading system guidebook, so I send you that, and there is another 121-page guidebook. So this is we do. Benefit is no shortage of profitable trade. People, it's not the shortage, is the quality of the trade. People don't understand. They ask, they send me emails saying, hey, or call me, how many trade you send? What is your win percentage? So these are not the uh, right questions. So trades, we do send out. I mean, there is, if there are 150 stock in the basket, there is one stock doing its thing. And if you're ready to catch, if you've done the homework, there it is. Or maybe you have existing position and one of the position is telling you to add more to the position, maybe average up or average down. So something like that. So we do all the work, equity curve rising, consistent portfolio growth. And if you are a seasoned trader, like 40 years, 50 years, I have members like that, they have been trading, you will see in the chart what is happening. So take the picture before and after and see the path. You can improve your own technical analysis by just, if you don't want to trade, don't trade, just do the paper trading. Take it as an education if you want, and learn and become independent trader yourself. So I will show you the chart. Next slide. I'll show you about 2023 charts of the existing trade. In my trading, is common sense trading, caveman trading, and I'll explain the caveman trading. There's a lot of 15 years of experience. I mean, I have a 1-year coaching program, so I teach all that caveman um, trading. But you see, there's no indicator here. So if you think I'm hiding some indicator, no. So just the volume. So volume is also very important. I analyze the volume. I have a system of analyzing the volume. I've done a lot of work. I spend a lot of money on volume analysis. I get the alert on volume based on the time interval also, and what else is happening. I don't I don't chase the stock. So if it's a climax volume, if I have a long position, I'm exiting unless I see some potential and I know that the volume is high, but there is a potential in it, and after 2-3 days of consolidation, it will go for another 1 or 2 days of run up, and then I will exit. So here is a chart of run. So these symbols you will see, I trade again and again and again. So you can, you see the symbol run, R-U-N, run. So this symbol has no meaning. It's just that it's run is, for a company called Sunrun, and they do maybe solar. I think they do in the solar business. So it so happened it's moving for whatever reason. So they could have assigned this symbol called dog, D-O-G, dog, and I care less, right? If you, maybe the symbol is dog, D-O-G, dog, and is doing its thing. If it's doing like this and the symbol is dog, then you don't say, oh no, I cannot trade dog, need to be cat. So there is a symbol for cat. So when you see like this early morning, 3 days of after big this drop, um, here is the support on the left. You identify, look on the left side. Here, look on the left side. So you say, okay, here is the left side, the gap up. Here's maybe that the day I entered, maybe I looked at all this on January 11th. So 3 days of a downward move, up move, and sudden breakout. So sudden breakout. So this is a breakout. So what are the odds for me that the sun will go down and keep going down and I will lose money? So I accept my consequences of trading this. So I see a stock say run on January 11. So I see a nice volume also. So then I decide, I say at this time, okay, Noshi, I saw this, it's looking good. Let me see other solar stocks. So other solars are also moving. And is it a Chinese solar or is it a in Indian language, Pakistani, we call Desi. Is it US solar? What it is? Other solars, they are moving. Okay, the basket of solars are moving. And I like this one is a slow, it's a low price, $26, not 24, maybe 24.70 at that time of entry. So what is the option? I look at it, how much time left? Maybe from January 11, I calculated for February expiry, and I have enough time. I say, okay, I'm going to buy out of the money call. Maybe 25 is strike, maybe 26 is available, and I get in, and my exit will be somewhere in the 30 area. I don't know. I'll show you the chart. I don't remember exactly where I exited, but I prepared, but I don't know. I don't remember because I prepared like 60 slides. So this is where I exited. So so entered here. Second day move. The third day start to pull back. Exit. So in terms of options, so when you are exiting, when you are in the trade, so many variables for you to decide for exit. There's only one reason, maybe um, to enter. It looks good. Oh, not this one. This looks good. Oh, I see it's looking good, pretty. I get the good feeling. Let me buy some calls. I bought it, but then I'm exiting. So I'm exiting. Why I'm exiting? I'm seeing a pullback. I'm seeing I'm only 2 days in the trade. I see 80% gain. I see January 13th. So I see a long weekend is coming. Maybe I have other position also. They are also profitable. This is a February expiry, so I exit. I mean, it's better. 80% gain is better on January 13th than 100% on January 17th, and it may not, or January 20th. What day it is? Sorry, forgot. Today is January, tomorrow is holiday. So 180% gain on 13th is better, which is Friday, especially the 16th is a holiday, and God knows what will happen on 17th and 18th. And then I will see all my 80% gain evaporate. And especially if I have other profitable trades, I'm locking in. So I do that, I take the exit. AFRM, so affirm. So look at this one. I don't think you need indicator. You need to train yourself with all the analysis. So this solid base here, and then it start to move. So what are the chances that it's showing this with a nice volume and it breaks down? If it breaks down, okay, my bad. Like when first time I learned this, my bad, and I had no idea what my bad, what my bad. Why saying my bad? So it will be my bad, exit. It fell, support is going down. I need to exit. Otherwise, I see 80% gain in 2 days. Maybe the market was also cooperating. So ARKK calls. So ARKK invests in all the technology stock, etc. So when the technology stocks are moving, and Kathy Wood is coming on TV, and then she's talking something. So I don't. So I look at the ARKK and I say, okay, ARKK gapped up. So what are the chances that it gapped up and then it will go down and do the reversal? So what is the chances? So I go buy calls, and what happened? 45% gains after 4 or 5 days of run up. So this gap up from the bottom gives me some assurance that I need to go long. So 45% gain. FSLY, same phenomena, gapped up, and I took the trade. 2 days later is another 31% gain, gapped up. What are the chances that it will reverse? 31% gain. CHPT, charge point, another low price stock. So all these low price stocks have started to move. The small cap stock, they are moving. If you're paying attention, the small caps stocks are moving, and they have already moved 40, 50, 100% from the bottom. So they are all moving. So what is the probability of CHPT after pulling back for 4 or 5 days and making a bottom and gapping up and with the nice volume? What are the chances that it will tank and make me lose money instead of making me money? So 86% gain after 2 3 days. Nice volume. Look at the volume bars. So consistent volume I got out because of the February call. So I closed a lot of position in the February position because of the long weekend, and the February have a less days left, trading days left. So I'm rolling my position into March or April. If March is not available, then April. This is the Carvana low beaten down stock. So look at the Carvana. I see 100 here. I don't know the weekly chart or monthly, but it seems like it dropped from 100, maybe, I don't know, maybe 200. But it so imagine how much, like, wiped out. People wiped out there. If they bought at 100 and they see $5 or $4, they're I mean, they will give this stock to their grandkids if they are holding it. They will say, okay, grandkid, your grandpa bought this stock when it was trading at 100, right at the peak. That was the peak, and I'm giving you this stock. Remember, hold it forever. Don't sell it because grandpa bought at 100. So, but I look at it and I say, okay, what is the chances? This double bottom, nice volume. I buy some calls, and here is the gap open. So gap is another word for gap is window open. So here's a window open, and when the window is shut, I will sell. So window open, window shut, and window really got shut like a bang. So 141% gain. Again, it's a February call, and it's a small price stock. It moved up from $4 to $7. So $4 to $7 is like 75% move in the stock. So, and here is the resistance level. If you look on the left side, here's the resistance. It tried to rally and it gapped down. So if the stock is approaching the level where it has from where it has gapped down, so all these buyers here, they will be happy to sell. Those who bought it at this double bottom, here, let's say their cost is $7, $8, $9, $10. They who knows, they will sell. And since I'm holding a February calls, so my 140% gain will turn into 141% or maybe 100% loss. Not 140% loss, 100% loss in few days. So I rather take 140% gain because the window is shut, and it's shut very nicely. Maybe it will go up. Who knows? It just keep going up. So if it keep going up, if it keeps popping up on my screen and I keep seeing it on a pullback, maybe I get a new entry and I buy it again. Here's a GS call. So when the financials are moving, when some good news comes, so I look at, okay, what is C is doing, what JPM is doing, what Morgan Stanley doing, what Goldman Sachs is doing. So all these 4 or 5, what American Express doing, what Visa doing, what's Square doing, what is PayPal doing. So look at all this basket and then identify the one you like, the one which is telling you something good feeling. So Goldman Sachs here calls and entered the very next day. Because entered next day, I think it was maybe February calls and other. So you note the date, January 12, 11. So if you have a lot of position in the February calls and the long weekend is coming, so besides closing this 141% gain. If you have also Goldman Sachs, then 35% gain. So 35% gain for Goldman Sachs in terms of dollar is more than 141% gain in Carvana. But so the traders make mistake here also. They buy one contract of each. So they buy, let's say, send the alert, they buy one contract of Goldman Sachs, and then it's a $300, $350 stock. When I send alert, they buy like maybe two or three of Carvana stock, this option, which is trading at $5. So um, percentage wise, so the dollar amount should be equal in your trading. So the dollar amount should be equal in your trading. So if you lose 100%, you're making 100% in someone else, or if you're making 35% and you're losing 35%, so dollar amount is the same. So pay attention to the dollar amount. What the traders do, they just don't pay attention to that. That's where the that's where the ruin is. Not paying attention to the dollar amount. They get stuck big. So pay attention to the dollar amount. So 35% gain. Now this one, Airbnb. So Airbnb, I watch Airbnb for different reasons. So I watch and I say, okay, what is the reason? What is the chances of Airbnb after making this boom kind of move, that it will go down and start to hurt me, then to go up? If it goes down, I know I will exit. But it went up. So 47% gain again, and it hit the resistance. So when the stock is moving towards your target and you have identified the target before, don't let it be the final that, okay, this is the target I've identified, this is my 40% objective, and this is what I'm going to take. No, you need to evaluate every day. Every day you need to evaluate your position in terms of what else is happening, in terms of support and resistance, in terms of what the stock has done. So constantly evaluate your position. So in other words, do your homework. So it hit this resistance and I'm out at 47% gain. I don't know, maybe it will go up, but when I look at this from this angle, and especially from the option point of view, I close the position. Roku. So I watch, this is another one, is on my symbol list, watch list, Roku. So I trade Roku again and again. Roku gapped up, went in just, for 2 3 days, and again out at 31% gains. Team team is also another one which is in my basket. So all these stocks are the one I trade again and again. If you come back after 2 weeks, I may be showing you one of these symbols again, and I'll show you the chart. This is what I did, because it's in the same, it goes back. Once I close the trade, it just goes back. Sometime it goes to the list of the short. If I see that, okay, it has gone somewhere and it's hitting some major resistance, for instance this gap at 170, maybe I'll put it in my watch list for puts. So if I know that it has a reason to come down and the market is also telling me that it has overbought or some kind of indication, then I will put this symbol for the puts. So 100 and team, what is the chances of team making this triple support, that it will come down and break, then to go up? It went up, it gapped up, and it went up again, 75% gain in 2 3 days. I exited. Riot. So Riot and Mara and other blockchain related stocks, they are moving in tandem. So Riot is moving and there's a lot of buying early morning. From early morning, the Riot was just moving up and up and up. And it's a $4 stock. If you look at on the left side, it shows 16, 17. Maybe it's more than that. This is a daily chart. I don't know about the week. Based on the weekly, monthly, I see some high, maybe more, but it just $20, maybe 20, I don't know what is it, but I see it's went to $3 or something, or $2.50. So now it's trading at 422. Buy some calls and 370% gain. So this is what happened to Riot. When I saw this red pullback, this was enough. February calls, 370% gain is good enough. So exited, but entered on this bar. Another one, airline. So airline stocks are moving. So Delta moving, United Airline moving, Alaska Airline moving, and JetBlue is moving, and Southwest moving. So these are the airline symbols. So you put some symbols in your basket for airlines. So when the airlines start to move, you can see it if you have a basket of just airline, and you see something is going on with the airline. Now the thing is, which one? So is it Alaska Airline, or is it a Delta Airline, or is it a United Airline? Maybe all, maybe just two of them in the same industry group. So what are the chances of Alaska Airline to go down than to go up? It went up 3 days of move, locked in gain for 37%. Amazon. So Amazon is just going down and down and down, just like Tesla and Apple. So Amazon, Tesla, and Apple, they're just going down and doing nothing. So I see 165, 170, and came down to 84. So Amazon, there was a news. So I watch Amazon, Apple, Google, all these major ones I watch. So it there was what this is the I must say this was the risky. There was some price action on the day I bought Amazon at $85, and I initiated, you can say, initiated little ahead of what I look for. So at 85, 82, and it pulled back for 2, 3 days, but it did not violate the low. It held on to it. It held on. And then the gap up, and then the move, and it hit the resistance. When it hit the resistance, I'm out. And especially I had a February calls at 80% gains. So it hit the resistance and I'm out. And I entered little early. The day for entry was this white bar. So my entry was early and was not 100%. It's not, I can rate that to my 100% satisfaction. But the third day, so in this 2 day time, because the entry was here, the 2 day time or 3 day of loss day, I must have lost some value in my option, some value in my option. So if I had entered on this third day, my gain would maybe more than 80%. So, but I initiated a little early. So entered 80% gain. CCL. So when CCL is moving, the cruise airline, cruise stocks, cruise line. So CCL, NCLH, RCL. So these three are in my basket because I know they move together. RCL, CCL, and NCLH, along with the airlines and along with the casinos. So the gamblers, they are going to Vegas or wherever they want to go. They go by plane or they cruise. So sometimes the news comes and the gamblers is stocks, gambling stock, casinos, MGM, Win, LVS, they move, cruise is moving, and sometimes the airlines are moving together. So these three, like these, and if you maybe if you were watching the stock of alcohols producing. I don't trade those. They may be moving together, or the company which produce pawn, maybe they are also moving. So all these are moving together. So when they are moving together, something is going on. So CCL and 20%, 9% gain. I did not make. I don't know why. It went down 3, 4 days and stayed in this area, and I made only 29% gains. So I got out, hit the resistance, I'm out. Coin. So coin moves when it wants to move. So some positive news comes with the Bitcoin, etc. So I spotted this gap up from the support, double support, gap up. So the window is open, gap up. So where it has a chances of coin moving up. So chances is going towards 50. This is the resistance. So anywhere from 45 to 50, I will be out. This is the resistance. This is where the coin has crashed. It's been crashing, God knows, from 200 levels or whatever. I know some people, they hold coin. So when I send this person, coin, and I said, so I entered here, and I sent him a message that I said this, that I went long on coin. So his reply was, I hope it goes to 100. So I hope it goes to 100. So, well, I don't know if it goes to 100. I'm buying calls here. So that tells that he is holding from 100. So from 38, I don't know where it will go. Maybe it will go to 45, 50. So I close after 2, 3 days, 54%. CRM, so I trade CRM a lot. So CRM, Apple, Baba, Baidu, Google, Amazon. So CRM gapped up. So what are the chances CRM will come and crash instead of going up? So went long on CRM. It could be here, and window open. So this window was open, this gap up, this window was open. The window got closed, and it got closed, and the second day I got out. I don't know what will happen. It may come down. There is a resistance here. So anytime the stock is make a gap down and then it starts to move up and close that, it's moving towards that gap. It's moving towards that resistance. So that gap is the resistance. So anyone who bought here, they're all holding, they are losing money. Anyone who bought here, they are all losing money at 150 and above right here. So they are all losers. So when it comes to 150, they want to close it. So if you're holding a call, you need to close your calls, especially if it's a short term. So 83% gain today is better than 100% gain after 3 weeks. Here's another one, EDU. So I watched EDU, the Chinese education. So I watched EDU, some buying or puts, so both sides, some buying or selling. So what are the chances of after making this bullish pin bar and there's a buying going on early morning? So early morning, what are the chances of EDU to go down, then to go up? So I bought the calls and sold the third day, 31% gain, hit the resistance. So this is the resistance. I don't know, maybe it will go up and make a new high. But for me as an option trader, I need to exit. So exited here at the resistance. This is another one, Mara. So if Riot is moving and Amara is also moving, so there is something going on with in this area, and I don't know what's going on. All I see is Riot moving, Mara moving. They are buying, so volume is up. I look at the option activity is huge, so I go long via calls, and Mara has clobbered. Based on the daily chart, I see 22, 23, and it's gone to maybe $2. So imagine they bought at 22. I don't know the daily chart. What's the high? So, and then it's trading at $2, and now it's 440, 450. And I entered, exited right at the resistance. Exited right at the resistance. I don't need to hold any longer because I'm seeing 57% gain. I may see 0% gain. Again, it's a UAL calls. Here is a nice bottom. I missed this first day of move. But the second day looks even better, looks very pretty. So this kind of chart where the market has tanked and it's sideways consolidation for days and days and days, and then suddenly it starts to move. This was the first day of signal, but I missed it. So if you missed it the first day, you can buy on the second day because you're hoping the third day and the fourth day um, somebody will buy from you. In other words, if you think some greater fool, so it's like this, the expert will say some greater fool will buy. As long as there is a greater fool, you buying something high, and then there is a greater fool to buy higher than you, then you are okay. So I'm just giving example. So if you miss the trade on the first day and it's doing like this and airlines are moving, you expect the airline to go here. And then I look at the earning also. So one of the way you can also take help, so there are many ways. One of the ways, look at the earning day. So look at the earning, when is earning coming? So earning is 1 week before. Airlines are moving. The first day was nice. Second day is also nice. Earning is somewhere. So I get in and look at that. It just kept going and going and going. and it hit the resistance. I think it crossed, even it's trading higher than that, but it hit the resistance and I'm out at 98% gain. So got out. WDC. So I trade WDC and all the other, related to like Applied Material, AMD, NVIDIA. So again, you need to have a basket. Sorry. So you need to have a basket of chip stocks like AMD, WDC, AMAT, the storage stocks. So all in the same category. Something is moving, or they may be moving together. So it's better if they're moving all together. So I got the entry on the gap up and 105% gains. And the market is also moving. I got the market long signal on January 4th. So on January 4th, I got my minor trend uptrend. So when you have a long signal for the market, and last year on January 4th or January 14th, one of these 2 days, the market has topped out. So when you have a long signal early on so I have 3 signals. So the first signal I got, so lined up your call position and start cutting down on your puts position. So WDC went up, again hit the resistance, I'm out at 105% gain. PDD, I trade PDD up and down. So if the Chinese stocks are moving, look at the PDD, BABA, all this. So there's always something going on. So PDD calls. This is the kind of chart I don't trade often because this is a very risky chart. So this is a very risky chart. I don't trade often, but I went ahead on PDD calls. There was a news and I exited also. So this is the kind of chart I don't trade. The kind of chart I trade is this kind, like an eBay call. I'm sure you most of the time the WDC kind of trade chart, the UAL kind of chart, the Mara kind of chart, not the PDD kind of chart. This is very dangerous chart because it's at the high. So I need to exit also quickly. So I exited at a 39% gain. Win. So this is again the win. So win is moving, airlines are moving, cruise lines are moving. So there is some kind of pattern. The casinos are moving, airlines are moving, cruise lines are moving. So there's something going on, and it's January 4th. And I get the market signal on my minor trend that is fresh buy signal. So all this kind of things lined up. So the ducks are in the row, and then I see when entered and got out at three days later, 36% gains. Another one. So this is the kind of chart I like. eBay. So maybe eBay moving and some other related stocks are moving. Looking pretty good after 3-4 days of consolidation. What are the chances that eBay with the nice volume is going down then going up? 32% gain 3-4 days later. Ben, so Ben related to finances. So Ben, Goldman Sachs, etc. They are moving. So it gapped down, making a high 29, and then 3 days of consolidation. So this, if I look on the left side, I see the support. I see the support at 24, 25 level. So not bad, gapped up. So what are the chances that it window open and then window will close? It window open, I went in, and window really got close and went all the way. So Ben took for few days, but it did go up. And when I saw the 59% gain and hitting the resistance, I'm out. LLY puts. So now Eli Lilly. So Eli Lilly, look at the Eli Lilly chart. You see on the top how much struggle it was putting on. How much struggle. So not able to move. Eli Lilly. I did in my consulting days. I used to work for Eli Lilly. So Eli Lilly not able to break. What are the chances for Eli Lilly to break through this? I mean, it may go break, but the chances pretty good it is having a hard time, very, very hard time in breaking the 370, 375 levels. So we bought the puts, and it took a while for Eli Lilly to do his thing. So now that's why it's only 31% gain. Otherwise, the stock to drop from 370 to 340 is a 30-point drop. If it happened fast, then a lot of gains, and not much gain, 31% gain. But eventually it crashed. So maybe I added more to the position. Every time I saw something that I need to add more, so I added and build the position, and then finally I exited at this support. So if I look on the left side, I see the support here. So after holding for 14, 15, 3 weeks, 31% gain is not looking bad. CCL call again, the same phenomena. Cruise airline moving, cruise lines are moving, airlines are moving, the gamblers are moving. So what are the chances of CCL to go down, then to go up with the nice volume it is? And for a few days it went down, not much. So this is where people send me emails saying, CCL not doing much. Should we exit? Is right here. I'm losing 50% in my option. So it just dwindling. It's just dwindling, dwindling, dwindling. And then suddenly it started rocketing. So rocket to the resistance, I'm out with 39% gains. So close this one. Am I showing you again or what? I think I went back, or is it a repetition? Maybe it's a repetition. EDU. I showed this. Okay, so this is Piton puts. So Piton puts. So Piton I trades up and down. So Piton is up and down. So if you look at the Piton chart, it went to like 50 plus. Now it's just doing its thing, trading in up and down fashion. So sometimes I buy puts, sometimes I buy calls. I don't care. So Piton puts trading at 899, 889. There was some news, bought some puts. So what are the chances that it will not go down further a little bit? Maybe, it dropped to $7. It has been dropping unless the news comes. So I take my flag, 31% gain. It dropped. So when it dropped for 3 days and then it starts to do its sideways consolidation, I don't know what will happen. Maybe it will break to the upside. So I cannot wait any longer. 32% gain is enough for me. I entered at 889 or something like that and exited at 8. mRNA puts, when we see a stock hitting this big resistance, when I see the stock hitting big resistance, and there is a news related, especially related to the drug company. So if there is a negative news in the drug company, they shoot first and ask question later in the stock which is related to drugs. Something happened, they failed the test, or someone died, or is not doing what it's doing, or it has some negative news or whatever, or some alternative came, something happened and the stock is doing like this. So what are the chances if I buy puts and then it suddenly it starts to move up? If it starts to move up, it will have a hard time in moving up. So buy the puts. And so I had a gain on the same day. I had a gain on the same day, and the very next day it went on a sideway move. So I said, okay, I need to wait one more day. But then on the third day also it went on a sideway move. So I exited at 48%. So on the same day I was in a profit, caught the move during the day, and then waited for another 2 days and exited at 48% gain. I trade workday also, up and down and up and down. So workday puts bought at 172 when it dropped to 165. So 7-point drop gave me 33% gain quickly, exited. Because this is the support at 160, 164 is the support. Before it rise again, I'm out. And this is the way I trade, but there's more into it, my judgment and my skills. So these are some of the charts I showed you. I explained to you about understanding who you are, understanding the market, which is very important, understanding what kind of a trading system you need to look at, whether to the upside, whether to the downside, and understanding what strategy you will adopt, understanding which port account you will trade, whether you will trade stock, whether you will trade options, whether you will sell covered call, whether you will sell some, you will do naked puts, what else you have in your portfolio, where is the earning coming up, where is the support, where is the resistance, whether the holidays are there, how many days left in the expiry, all that goes on, and to make your decision. 6 8 weeks, yeah. So buy 6 to 8 weeks, yes. First of all, to avoid the time decay. And then, if you have seen some chart, the stock gets stuck. So as long as they are within the range, you hold. So um, intention is not to get killed in the time decay. So I buy, now I'm buying in March options, April options. So I'm not buying weekly. I don't want to be right and then still lose money. So I don't want to do that. I don't want to be right and lose money. So if I'm right, I want to make money. Not I'm right, but I'm not in the business of being right. So that's one thing. You are not in the business of being right. You're in the business of making money. So, you know, not I'm right, but the time ran out, I'm out of luck, and then I get killed. So the message delivered late. It's like the message got late delivery that he is innocent. By then I'm what is it in England they used to do? Quartered, hang, quartered, burned. So not like that. So when the verdict comes, I'm still alive. Then I'm innocent. So option, when the target hit, you need to be alive with your option. So traders, they just buy, you know, traders do this mistake. They buy with very little time, or they buy a lot of time. They think if they buy a lot of time, they are safe and they will make money. Wrong, unless they believe in the fundamentals. So if you're trading technicals, you need to be right fast, and you don't need to buy a lot of time, just enough time. If you buy little time, then you get clobbered. Traders trade, they have a bias. So traders make over commitment to some of the symbols. They have a bias towards those symbols. The bias is toward Tesla, Amazon, Boeing, CRM, Apple, Meta. They have these biases. They want to trade this. So as if the other symbols don't exist. So put too much money in just these symbols or some others, big name, where there are some other symbols also. So buy less time, buy more time, or buy their favorite. They get some excitement. They just trade those symbols. So some of the mistakes. So trading is about eliminating all the mistakes. Trade little, little. So trading is a game, and it's about betting. So trading is a game of betting. So you need to bet, spread out your bets. So you are, and then recognizing where is the opportunity to increase the bet. So there is some opportunity where you increase the bet. There's opportunity to just initiate a small position, because when you are initiating the trade, that's where you are making the biggest could be making the biggest mistake, not recognizing completely, not all the information available, not making the right decision. So when you're initiating a trade, that's where you're making a mistake, the biggest mistake in the trade. So at that time you need to be careful in initiating a position, because when you're right, it will tell you you're right, and then you can add more to the position. So hold on to, when you're initiating, you don't initiate um, a big time, because you need to be right then. And then you don't, if you're wrong, then you're losing. So don't do that. Don't initiate big position. Market will tell you you're right. And if you miss it, the next day it's flying, 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 flying. Okay, you missed it. You just bought little and it's okay. There is another one. So always initiate, because at that time, the time you're initiating a position, that's where you're making your decision, and your decision could be wrong. So give time. Next day, maybe 2 hours later, maybe 3 hours later, the traders make mistake, and if they are paying commission, they are in a hurry. So they want to cut down on their commission, etc. They don't have time to buy again, so they just buy it at that time. Just one don't have time, I don't have time, so they just buy it, whatever. Traders just follow the default setting in their brokerage platform. So if the broker has set up 10 contracts, they just buy 10 contracts. If the broker has set up 500 shares, they just buy 500 shares. So they do all this kind of mistakes, and they lose money. So so I will end here, and I will see you in 2 3 days with another topic. And if you have any question, let me know. I will see you when I see you. Thank you.